So in this video, I'm going to show you how you can invest in gold using Trading 212. Now, if you would like to sign up to Trading 212 and receive a free fractional share worth up to £100, all you have to do is to click the link in the description box down below. Alternatively, if you've signed up to Trading 212 in the past 10 days and haven't received a free share, all you have to do is click the 3 horizontal line menu over here. Scroll all the way down until you see the section use promo code. And here you can type in my code JUBAIR and you should receive a free fractional share. So as always, this is a beginner's focus guide. If you've already signed up to Trading 212, you'll probably see a screen like this, although you probably won't have the same amount as I have. But you'll see a portfolio screen here, which is the sum total of all the investments you have. This might be 0. And then if you have any other stocks and shares, they will populate down here. Now today we're going to be using the search function. So if you go down on the bottom of your screen, there is a magnifying glass, so just press that. Now when you press it, you'll see this screen which shows you, the top traded, stocks and shares, but we're not going to go into that for now. We're just going to type in gold. Now when you type in gold, you will realize that first of all, the search is populated by, companies that have the name gold in them, but we want to define that even further, refine or define, just by pressing ETF. Now after we've pressed enter, you'll see that now we have a list of ETFs that you can actually invest into. For example, a lot from iShares and even Van Eck. Now what will happen if we actually go into this one over here? Now as you can see, this is the iShares Gold Accumulating Fund, and what ETFs are, if you haven't heard of them, is a company manages an ETF. They just buy a bunch into a specific fund, setting, theme, or different bunch of companies. For example, a company will buy lots in gold and then share out what they have in terms of their gold value to their shareholders. The more shares you hold, and if the gold price increases, then of course you will be rewarded as an investor. Gold has long been seen as a good investment. As someone who has a PhD in biomaterials, I can tell you in terms of its material qualities, gold is excellent because it is an excellent conductor of electricity. It also has a very specific appearance towards it, the gold color, that you can't get from any other material. As a material scientist, I can go on and on, but its malleability and its ability to be non-corrosive and basically physically inert makes gold a very precious metal. And also the supply of gold is completely limited on Earth. Once it runs out, it runs out, and the same gold is therefore recycled. But anyway, this is an ETF. Let's just check out what it does. So this fund seeks to track the return of gold spot price. So this is different from other ETFs that we're going to see. But why I wanted to show you this is over the past year, it is up by 12.18%, which is pretty good. I think this ETF hasn't been trading for too long. That's why we don't have a whole year figure for here. This only starts from June. So since June, up by 12.18%. Pretty good here. Now the expense ratio is 0.19%, as you can see. Anything under 0.3, I would say, is pretty good. Anything over that, you have to consider that you're paying quite a bit of a price just to be able to invest into this ETF. Now, like I said, there are a lot of different ways that you can invest into gold. Even within these ETFs, there are loads of ways to get direct or indirect exposure to gold. For example, the Van Eck Gold Miners Fund. So as you can see, over the past year, the Van Eck Gold Miners Accumulating Fund, so the dividends or anything earned gets reinvested back into the fund, it is up by 9.39%. So obviously you're not going to be owning any sort of gold here, but instead you're investing into gold mining companies. When the price of gold increases, then, the miners become more profitable, of course, because they're doing the same thing, but now with more valuable goods. As a result, the shareholders should be rewarded more from these funds as the value of, gold increases. So indirectly, you are investing into gold. Of course, if the company decides to mishandle its money and stuff like that, the risk is going to essentially be on you, and you could lose money too. Here's another fund which is denominated in euros, so maybe you won't want to invest into this, but just to show you, over the past year, up by 17.33%. So this fund seeks to track the performance of an index composed of companies related to businesses engaged in the exploration and production of gold. As someone with a PhD in biomaterials, I can again tell you, gold isn't produced, it is mined and refined. But anyway, it still counts as production of gold. You can see that depending on the fund, the expense ratio can be quite expensive. This one has a 0.55% expense ratio. But then again, you are investing into a very specific fund where it is focused on gold producers. If you want to check out the top 10 holdings, you can see here. I personally wouldn't have heard of any of these companies anyway, but you can check this out on the Trading 212 app for yourself if you wanted to. Now, one main way that you might want to invest into gold is to get an ETF that actually tracks physical gold. I know that iShares has one, so if I type in gold iShares, if I scroll down, there are two here, the iShares physical gold and another one here, the iShares physical gold. If you are stuck on how to decide between an ETF, the main things that you would want to check is that that ETF is denominated in your local currency. So if you're in the UK, it will be either pence or pounds. The second, of course, is that the ETF is listed on your local stock exchange. So if you're in the UK, if it's London Stock Exchange, then more than likely you won't have to pay a foreign exchange fee. But let's go into this one here, the EGLN. As you can see, this is iShares physical gold. Over the past year, up by a massive 34.03%, so beating out the S&P 500. If you are a UK-based investor, you probably want to skip this because it is denominated in euros, so you're going to have to pay that foreign exchange fee. So back just one step, let's go here and go into the IGLN. As you can see, sometimes, you have to search for your own, as this is in dollars, so we have to go back to the drawing board. Okay, so if you are a UK investor, I found this one for you, the iShares physical gold in pence. So as we know, 100p, 100 pence is £1. This is the SGLN, and this is based on the London Stock Exchange. Over the past year, up by 28.27%. If you are wondering why the EGLN has had a higher return, that's because it's based on euros. And because gold is such a universal form of currency, we're taking into consideration different currencies, the exchange between the pound and the dollar and the euro, and all sorts of other things. But anyway, if you want to invest into physical gold, this might be a good ETF for you. Over the past year, up by 28.27%, very similar to the return of the S&P 500. Now let's check out how this ETF works. So essentially, this fund from iShares invests in physical gold. The fund only accepts gold that meets the London Bullion Market Association, the LBMA delivery rules. And essentially what a gold bullion is just a block of gold, usually, 1 kilogram, 5 kilograms. They might even have more than that. You can even get 100 grams, but a bullion is just a piece of solid gold, usually 24 karat, which is the highest purity you can get on gold. Just as another PhD tidbit here, you can't get anything 100% pure. As soon as it comes into contact with air, it's just impossible for anything to be 100% pure, but 99.99% gold, that is what they are investing in. So this fund has a good expense ratio, I would say, of 0.12%. Remember, it's not always about expense ratio. Of course, the S&P 500 can be really cheap because there are a bunch of indexes tracking them. But when you get to something very specific, you have to remember that there are no alternatives. So, expense ratio isn't always, you have to be lower than X amount. It's based on the alternatives too. You can see since March of 2018, gold has increased in value, at least with this ETF, by 150%, which is really, really good. Again, not giving financial advice or telling anyone to invest in gold, but the benefits of investing in gold is that, gold is finite. It is heavily used in a lot of, electronics, gold being one of the best conductors of electricity. Many electronics in your house will require the use of gold. Gold and copper are going to be very important and paramount as technology increases. You can't, expect yourself to be hoarding gold in your house, because what if your house gets robbed? What about insurance and all of that? So if you want to invest into an ETF like this, it's very convenient because you don't have to own gold. You can go on holiday with the peace of mind that nothing's going to get stolen from you, unless of course your phone gets stolen. If for whatever reason you don't like iShares, Wisdom Tree has you covered too. As you can see, this fund here, the Wisdom Tree Core Physical Gold, is very similar, up by 28.18% over the past year. This also has the same expense ratio, so they're very competitive with iShares of 0.12%. And again, there's no description here, but I could bet my bottom, gold coin, which I'm not going to do, that it is pretty much the same thing or very similar, in that they invest into physical gold bullions. And then, the ETF is based on that. There's also, if you want, the Invesco physical gold. Over the past year, up a lot again, 28.14%, very similar funds here. The expense ratio isn't available on here, but you can easily go and Google that. Just ETF or someone like that should have it covered. There is also the Royal Mint Responsibly Sourced Physical Gold Fund, the RMAP, and over the past year up by 27.97%. Again, all these extra details not currently available on Trading 212. So as you can see, if you want exposure to physical gold without holding them, on Trading 212 there are plenty of ways to do that. So make sure to check out some of my other videos and I'll see you in the next video.